Basically what I'm looking for is how to make money using your retirement account, or I'll show you in the latter part other even private money. You can make it, structure it such that you can make it tax-free. And I'm interested in kind of both of those areas. And that's why I really developed these programs. And they're kind of unique because I can talk to you guys about these things, but I really can't talk to the CPA colleagues that I know because they're not in that space. And nor do they really want to get into that space. So that's where we're at. I am not anticipating these areas to really change with the new tax law, because basically they're geared on the retirement areas, and to one extent, the last section I'm doing, it was just modified in the beginning of 2016 to permit you can tax-free growth for business income. So basically, we should be okay on that. I've looked at a few life certainties. Basically, from what I hear, everybody says it's death and taxes, you know. But for these programs, it goes a long way at eliminating the tax part. I haven't really, some other organization I assume is handling the other part because I haven't figured that one out yet, okay? Nor do I intend to really try. But basically, this first one is on social 401ks and IRAs. They're basically one and the same, but they're very different. What you hear touted most of the time is the IRA, self-directed IRA. But by far, in my estimation, the 401k is a better product to accomplish things that you want to do, especially in real estate or other areas. Here's a disclaimer. Nothing what I say today are you holding me responsible for, because basically you really should consult someone, either an accountant, attorney, or investment advisor to implement some of the programs. In reality, we all need money for retirement. Basically, you know, you need a fair amount that produces income for you on a regular basis. And retirees need about 70 to 85% of what they're earning now to sustain themselves in retirement. Currently, there's not that much money going into these programs, like people taking their retirement money and putting it into real estate or businesses or whatever. Most of it goes into mutual funds and stocks, bonds. And the reason for that is basically it's a function of really, there's nothing in it for anyone else. They're not making a commission on it. Basically, an IRA or a 401k is just a trust. It's a trust that's permitted under the tax law. Different sections of the tax law, but that's basically what it is. It's a trust instrument that puts the money in your hands versus leaving that money in someone else's hands. Investing in alternative assets, there's differences in the IRAs and the 401ks. With an IRA, I have to take the money and place that money in someone else's hands first, which is naming a custodian. Like there's various organizations around the country that do that. Versus a 401k, which is really a different type of trust, but it permits you to be the trustee of that money rather than have somebody else handle that. You end up with a checkbook that you control your retirement money. You do need some outside help, like a facilitator, somebody who sets up those plans, and possibly a CPA organization for complying with tax laws. Again, remember, both of these plans are tax serious. They're set up with a tax structure in mind. So when you really look at what am I going to do with my retirement money, it's basically you've got two decisions. First, you have an economic decision. Okay, forget about the taxes right now. If I'm going to buy this asset, this house, am I going to make money at it? If there's enough of a spread between what I have to pay for it, what I have to maybe even put in there as fix-up costs, and what I can sell that thing at, then if there's enough of a spread in there, I've got my economics down. There's other aspects is basically how can I buy that and minimize my risk? What I tell people is when you start taking money out of your pocket, you start biting off risk. So my basic rule of thumb is basically take as little money as possible out of your pocket, buy an asset, control that asset, make money on it, and then we go into the other side, which is how do I want it? Do I want it on my tax return currently? Do I want it deferred until I until I retire? Or do I want it, I don't want to ever pay tax on it. How do I structure it? That's what we do, okay? Why is only 34% invested in alternative assets? Like I said, there's nothing in it for anybody else, okay? You go to a financial planner, what is he going to do? Tell you to buy real estate? He's not going to get any commission out of that. If you go to a realtor, most of the realtors want to sell you your individual residence. They're not acclimated to handling investment real estate. And to a great extent, a lot of the realtors, they want to sell you something at a retail price. How am I going to make money on buying retail and then trying to go out on the street and sell it? I'm only going to get retail price again, or maybe even less. So basically, what I tell people is basically don't bring me anything at retail. Bring me at wholesale or below. Bring me the deals. When I do, when I look for both real estate and businesses, is basically I look for the situations that, like a banker, he's not going to make a loan to that guy. That's the type of business I want. I tell people on the real estate side, if my wife will never set foot in that house, that's the one I want to buy. Because basically, when we were doing fix and flips, we would buy them on like Friday or Saturday of the prior week, and on Friday they would be when we bought them, they were the worst house on the block. And the next week they were the best house on the block, and people would want to rent them. It's a lot of cosmetic fix-up on fix and flips, but you really have to know what you're doing. But here's a list of various reasons why people don't get into alternative investments. A lot of them situations is basically most of the people don't know. That's what I hear all the time from all over the country is basically, I never knew you could do this. I've been looking on the internet for the last 9 months trying to educate, and so they're amazed that you can do that. About 50% of my clients I've never met, nor will I ever meet. Just this week, a client from Australia came into town. I started dealing with him years ago, never met him. They were a little uncomfortable not ever seeing me, so they wanted to have drinks with me, and so we had a good time for one evening, and they indicated they were comfortable. Now I could put in the face to the name and the voice. And a lot of times, wherever your retirement money is, it's not set up to do what you want. And if you hear the story or what people will tell you is they will say, well, it's your retirement plan is for self-direction. Here's the 10 stocks that you could buy. That's your self-direction limits. But in essence, the limits are set by the tax code. And the tax code doesn't say what you can buy, it says what you can't buy. Okay? Here's some of your investment options. And this is just a half, a partial list. Most of the time, I dissuade people from doing investments, even in some on this list, because you need an expertise in something. Because if you don't know what you're buying, you're probably going to lose money. I'll give you an example. I've got a client we're currently working with. She was referred to me by another CPA. She's a business client, but in the first 2 years that she was controlling her own retirement money, she proceeded to lose $175,000 of it. Now that's not abnormal. I've seen 350 go. I've seen $1 million go. And when you talk about, I've lost this, okay, and if I do some good stuff, good investments, I can get back here, you're still at zero. You haven't made any money. You're just back at the starting gate. So it's basically what I really lecture people about is, and I tell them, you can do anything with your money that you want once you sign up with me, but you have to pick up a phone before you pick up one of these. Because I tell people, you are no good to me poor, you are only good to me rich. And you're good to yourself rich. Because that's your retirement money, so to speak, and it gives you comfort that you know that your security is planned down the road. But here's some of the assets. Most of this money goes into real estate, the vast majority. But even there, you can make some big mistakes. We have a foreign client, a Chinese foreign client, that put unlimited amounts of money over in the U.S. The problem is they put it in to American hands that couldn't produce results. So the Chinese are unhappy because they lost millions of dollars. And this has happened both locally, and I'm involved with some other property up up north. There's a $3 million piece of property up there that's upside down, owned by Chinese. So there isn't any lack of money available to buy these investments. What I've determined is there's a lack of people, credible people, that you can place that money in their hands and they can earn a profit on it. There's you can do anything, buy any assets except these. Okay? You can't buy flow-through stock. This is a subchapter S stock. We'll get into businesses but later. But you can't buy like a wine collection, art collection. Okay? But if like I tell people, if I think I can make money with racehorses, I can buy racehorses. Because the tax law does not say I can't. This is what it says I can't do. Okay? So if I stay within those rules, I'm good to go. Again, this is a whole tax area. It's rule-based. So it's like I'm playing a game and I have to pick up the rule book, which is the tax code. If I stay in and play the game with those rules, I'm good to go. Here's an example, okay? There's the only limitation you have on these type of investments is your own mind. Say we went through a depressed real estate market, but say I want to retire in 10 years. Okay? Well, and I have money in my retirement plan now. But I've got my eye on this retirement property up north. I really want it. Well, when's the best time to buy? When the market's depressed. Because all I want to do is go up there, put up my heels, have a drink sitting there, and read a book. So I'm not real concerned with that value of that property increasing, decreasing. It's like I want that property. So I'm assuming I'm going to retire in 5 years. Okay, can I use you can use your retirement money, IRA or 401k. I can buy that house. I can buy that property. No restrictions. Benefits is basically I've locked in the purchase price. I can rent that property out until I'm ready to use it. So somebody else is going to be paying for that thing for me. I can use my IRA or 401k money to fix it up. And like I said, the renter's paying down the mortgage on that property or if I have one. One thing with mortgages is I cannot personally guarantee any of the money. When they say, Ken, you're going to have to guarantee the loan, I can't deal with that mortgage company. There are a few banks that I can deal with, a few organizations. I can deal with private money because basically they don't make me guarantee it. I can deal with certain banks because they are acclimated to working in these programs and they don't make me guarantee it. And the interest, what I look for is the interest is basically tax-free, or not tax-free, but a normal bank interest. So I'm not paying an exorbitant interest amount. Some prohibited transactions. Like I said, we got the tax code out there. It says what I can and cannot do. There's a penalty for that. If I have an IRA and I stumble over some of the prohibited transactions, what the IRS does at that point is come and say, that 100,000 that you didn't follow the rules with, I want it on your tax return. I want to see that $100,000 on there because it's all taxed right now. It's a prohibited transaction, and we declare it that, and it's income to you right now. If I have a 401k, again, we've got two animals, different sets of rules. I did that same wrong thing with the tax code. And I realize I did it, or somebody points it out to me. With a 401k, I can say, I'm sorry. I will correct it. Okay? And so, in fact, you do have to go back and fix that problem. If you do that with 401ks, you're okay. So you see there's a difference in the type of retirement plan or system that you're using. Here's some of the people I can't deal with. I can't buy, sell, I can't have them live in my properties, anything. Okay? I can't deal with my spouse, ancestors, parents, grandparents, children. I can deal with a stepchild. I can't deal with other people, fiduciaries and investment advisors on these various products. And if I own a business and I own 50% or more, I can't buy that building for my business. But if I own 49 and someone else owns 51, I'm not in control. I could theoretically buy that office building or manufacturing building, rent it to the company, because it's going to be deemed an arm's length transaction because I wasn't in control of that money. Like I said, you can't purchase some property, I just want it there, I'm going to rent it out most of the year, and then I'm going to use it for summer vacations. It's prohibited. The IRS doesn't permit loans for IRAs, but they do for the 401ks. With a 401k, I can loan myself. Now remember, I've got this checkbook over here that I control all my money. Do I have to come and ask Ken, can I loan myself 50 grand out of my own money? No. I write my check. What you do probably come over and call me up and ask is, I'm going to loan myself some money. What documents do I need? And I will tell you in your package, there's a loan, there's a note. You fill out the note. What interest rate I normally get? What interest rate should I put on it? The interest rate's up to you. You're the beneficiary of this plan. You're going to be receiving the interest, and you're the individual over here. You're going to be paying it. So the interest rate is really up to you. What I normally recommend is basically look at what the current T-bill rate is. Put that interest rate on there. Okay? If you want to, from a planning standpoint, I could put 50% interest on there. Why would I do that? Because I want more money in my plan. Okay? So when you start playing around with what can I do with this, you are the limiting factor. Because if you don't know what the rules are and how to play with those rules, then you may suffer some economic consequences. Um, you basically, like I said, you can't buy a commercial building for personal use or apartment building for any of the people that were on that disqualified list. Okay. These are not disqualified people. I can deal with these guys. Now, they seem like they're still close to me. But again, we're going back to the tax law. The tax code says I can do this. I can deal with these guys, brothers and sisters, aunts and uncles, cousins, stepchildren, step-parents, grandparents, step-grandparents. I can deal with all these guys. Okay, on disqualified, like I said, if you own 50% of a business, I can't deal with that business. I can't buy that commercial building for the business. And I can come in and say, well, I don't own it. My kids own it, or my wife owns it. I don't own anything of the business. I just go to work there. Well, you fall under what's called the attribution rule. Somebody on that list that said I couldn't deal with them, they happen to be the party that owns that building or that company. Now, that I like to think I have somewhat control over my wife, okay? She lets me think that sometimes, okay? But basically, you kind of do, or your kids. So basically, what you're really looking at is, I can't deal with that, even though they own it. If my brother or sister owned that, I'm good to go. I can buy that commercial building for their business. Here's the 5 top prohibited transactions. And this is the very reason I say you can do anything with your money that you want except pick up a pen before you pick up a phone and call me. Is basically, with that one comment, which I thought was heavy-handed, I get a lot of positive feedback because it has eliminated 95% of my problems. I have dealt with problems where people get a bill from the IRS for $100,000 that says you need to pay us that because you took this much money out of your retirement plan. And they come, I didn't take that money. I told them to take it from my plan over here at the company and put it over into my IRA. Well, they did do that, but they did it wrong. And you didn't, and that 1099 that you received, you ignored. Because you thought, this is just a needless piece of paper. Well, it wasn't to the IRS. Now you've got to convince the IRS, I don't owe you $100,000. And that is an uphill battle a little bit because they like their money. So with that rule is basically, I get a fair amount of phone calls, Ken, I'm going to go do this. What do you think? And I give you my 2 cents on the economic side, and I tell you how to structure it from the tax legal side so that we don't run afoul of any of these. So basically, like you said, can't use your properties. You can't use like sweat equity. Like Ed said today, he poured 12 yards of concrete. You can't do that in a 401k property. You have to hire somebody else. You can't pay the expenses for for your pension plan. If that pension plan owns that house, that's not you. That's your plan. So basically, I can't take my plan check, my personal checkbook, and write that check. What happens if you do? Well, if you do, there's some provisions in the law that says, okay, I needed to do it. The money was due right then and there, and I either didn't have it in my that check, my IRA 401k checkbook, or there wasn't enough money available. I had to do that and then make my contribution later in the year. You are allowed to reimburse yourself for errors like that, where you spent personal money and it was really for the retirement plan. So, but I wouldn't make a habit of it. And a lot of times we ran into a situation just this week with a commercial property where I explicitly set this one up several years ago, went over the rules with a guy, and he proceeded to use personal funds in this Roth 401k controlled property. Now, again, his original intention was, I want to make this money tax-free. And it happened to be $2 million. Okay? So, now for that error, what did I do? I negated that tax-free element if I don't correct it, and fairly fast once I was made aware of it, because basically now that $2 million is going to be subject to like capital gains tax. I'm going to pay 20%. I messed up with $360,000, and that $360,000 error is really going to cost me $400,000 out of my pocket. That doesn't make economic sense. Okay? So basically, these rules have to be followed. And like I said, this is the bottom rule here, is basically has eliminated most of my problems. And I deal with this across the U.S., and I really don't have these problems to deal with anymore, because people either check with me before they end what they're doing to make sure they're within the rules. What's the taxes on this stuff? Well, basically, if I do something, and this something generally is, there's two kinds of money earnings that you're going to make. There's going to be something where I buy something and it makes me money. I buy a house and the house increases in value and I sell it. I made money. That's called passive income. I really don't have to do anything except the transactions. And then there's another area where I buy this house, it's more or less a fix and flip property, and I need to paint it. I need to put carpet in. I need to fix the outside. I need to fix the yard. Well, heck, I can do all that. That's active income. And then when you get into active income, it's business. But when you get into doing it yourself, it's prohibited transaction, okay? But if you get into doing just fix and flips and I hire contractors to do that, I can do that. But with IRAs, if I say have 10% of my money in that property and 90% of somebody else's, it doesn't matter whose, 90% of that transaction becomes taxable. I have to file a tax return on an annual basis, and when I sell that property, 90% of that property, that profit, is taxable at the corporate rate. And with IRAs, another reason I don't like IRAs is basically I can do that, but I have to be out of that debt with an IRA for 1 year before I can sell it. And my question is, if I didn't have the money to start with, where am I going to get the money to pay off the debt for 1 year? That is IRA or qualified money. Where is that going to come from to pay that mortgage off for me to hold that property 1 more year before I sell it? It probably is not going to happen. So, so that's what you're involved with debt financed income. Active income, again, I'm in business, and when I'm in business with IRAs, I have to file this unrelated business taxable income, or with a 401k, unless you structure it differently. The tax return does allow for all the normal deductions, and you only start paying tax after the first $1,000. But after that, it's the corporate rates. Okay, how do I really kind of make money on this stuff? And I tell people intellectual capital is much more important than money. Capital, financial capital. Everybody out on the street has money. Money's not a shortage. What is a shortage is intellectual capital. How do I do it? So in this situation, this example, Mark opens a Roth IRA or a 401k and puts $3,000 in it. And when you talk about how much money do I need to do retirement investing, this is about it. If you know what you're doing. Most of people have a lot more because they look at investing in an old-fashioned way. It doesn't take a genius to reach in their pocket, pull out a few $100,000 and say, I want to buy it. That's not super complicated. Doing this stuff is. It takes a little bit of different thinking. His friend Dan buys a property for $185,000. Okay? What Mark does is he comes to Dan and says, I'd like to buy that property. I will, in fact, pay you $200,000. But I don't want to give you the $200,000 all up front. I want you to give me an option to buy that. I'll give you $3,000 for this time period. It can be anything that you agree on. 90 days, 6 months, year, 3 years, it doesn't matter. But during that period, you control that house. Okay? Mark can't sell that, and he can't tell you, no, Ken, I'm not interested in doing this anymore, or I'm not interested in doing this anymore, I want out of the option. It can't happen under the law. if Mark ultimately finds a property buyer at a couple hundred, $250,000, okay, and we do the transaction, Dan, the original owner, the seller of that property, receives 200 grand. Mark, he receives the difference, 50 grand. 50 grand on a $3,000 investment. Pretty decent rate of return. Now, did he risk a lot? I wouldn't say risk a lot. What did he do? He used his head, his intellectual capital, to create a good situation. If he did 3 of those deals a year, he'd make 150 grand. Now, how hard are you working? Okay, to do that. This is all, and because it's in a Roth, it's all completed tax-free. I mean, what's not to like? I'll give you a very clear example. I went over this example with my wife yesterday. Several years ago, we rented an apartment. And the guy was just, I want out of this apartment, whatever. And so I says, okay, we'll rent the apartment. I would like an option to buy it. Just the same as this. With that one sentence, all I said is, I'd like an option to buy it. Okay, and we negotiated a price. So we lived there for a few years, and we decided we were going to move to another condo in another area of town. So I told my wife, her name's Maria, or Consuelo, we're going to sell the place. And my wife came back and says, you can't sell it. You don't own it. And my wife's from South America, Colombia. And sometimes, and even Americans, sometimes these types of transactions are hard to comprehend. But I said, we own the option on it. I can buy this. It still didn't equate because basically it's a different type of transaction. I, in fact, had to go through 2 realtors before I found the realtor who understood options. But when I did, that realtor found a buyer for the apartment. Okay? Now remember, we were just paying rent all this time. I didn't pay anything really for the option. Supposedly, you're supposed to have consideration for an option under under legal rulings. So, transaction came down. Now remember, my landlord, he was tickled to death to sell this unit. But when we got to the transaction, there was $7,000 extra on the table. Now he becomes very upset that he's losing this money because he let me get into an option. And there wasn't anything he can do because basically we came out of there with money. So that's my own experience in doing this. So my advice to anybody is you can rent anything you want. With the one sentence, would you be interested in giving me an option to buy this? That one sentence can make you thousands and thousands of dollars. The worst they're going to say is no. I'm not going to sell it. But if they say yes, okay, then what you need to do is say, okay, what's the current value of the property? Not the future. Okay? Some of the smarter people will try to go to the future, will determine it when you want to buy it. But what you want is, I want a fixed price now. Because if I get a fixed price now, and that, say that the property values skyrocket, you're in the same situation that I'm in with my condo. I got a big spread there in that property. What happens if they go south? Properties decline in value. Remember, I was just renting. I don't have to exercise that option. So I don't have any risk. The only risk I have is if I turn loose of any money like he did on that $3,000 of option money. That's my risk. So it really, that one sentence can make you a lot of money. And if this is in a Roth 401k or Roth IRA, that's never going to be taxed. You're never going to pay a dime of tax on that money. Okay? Unless you feel totally guilty about not shorting the U.S. government, then you can make a voluntary contribution. But I haven't had any clients in 45 years do that. Okay? But if you did these transactions, just if you really focused on doing this kind of transactions, there's the kind of money you could make. Okay? You could get into several millions of dollars just doing a few transactions like this a year. Now, for 1 year, because of doing this, and the only people that can really make money off of doing like real estate transactions are realtors. So I got the idea that, well, we'll just focus in doing 401k seminars for realtors. I did that for a year. I don't think I ended up with one client, because basically the realtors are, that for the very most part, came to those seminars were wanting to sell you your residence. And I told the realtors, all you need to do is ask one sentence again. Okay, Vivian, I'm selling you your house. You're happy with what I did, happy with the house that you're buying and everything. Do you have any retirement money that you would like to reposition into investment property? We can figure out a way to structure it. One sentence. That one sentence on my average account would produce 2 more house sales. It seemed like a no-brainer to me, because basically, why wouldn't I want to sell you 3 houses rather than 1? And the worst case scenario is, all you say is, no, I don't want to do it, or I don't have the retirement money. Okay. If you know of anybody, of your friends, let me know, because I can do it for them too. Because basically, remember back on the earlier slide, one of the number one reasons people don't do this is they don't know they can. If this was compounded, it's fantastic money that you can get, and you're just using your mind and a little bit of money maybe. When we get into businesses, I'll tell you some of my business stories, and my philosophy on how much money you have to use. So the process is fairly straightforward. I really need a trust. I need to create that trust to transfer my current assets. It's like I have to have a basket to put them in. And what I normally do is I create that LLC. Why? When I go to buy something and I say I have Ken Lindau's 401k trust, they go into gridlock. I'm going to have to check with my attorneys. I'm going to, on and on. It becomes a real problem. So if I take my money from up here, create this LLC, which is owned by my 401k, and move all the money down here, now I'm taking an LLC into you. You will never ask me, is that my retirement LLC? Is that your personal LLC? They never ask, who owns that LLC? They don't. It's pretty much a non-event. It doesn't happen. Because it's a different entity, I need an EIN number. And I need a bank account for this thing. So in the end, I have two bank accounts. One for my 401k plan and one for my LLC. And I've got my money here. Again, I've got two checkbooks in my hand. Since this is a IRA, I have to tell the custodian up here to transfer my money into this LLC. But if I'm setting up this is IRA, but if like on this slide, if I'm setting up the 401k, pretty much the same process, with the one exception. I don't have anybody else to deal with. I'm the beneficiary, I'm the trustee, I'm everything. So I go to my prior employer and simply say, move this money from here over into Ken Lindau's 401k plan. And it's not a distribution, it's a transfer from one plan to another. So I don't want a 1099 on it that says it goes on my tax return. Now, that's one area that you have to watch carefully. It can be fixed if they mess it up. But it normally would take a knowledgeable accountant, more or less, to really make sure, because you have to put that 1099 on there. Remember, the IRS received that. They said, you owe this much money, or you received this much money, you owe this tax on it. So you have to really show on your tax return that, yes, I got this 1099, but it was an error, and I'm backing it out over here. So my effect is zero. Okay? And so that's pretty much the situation. Now with this LLC down here, I do it for a 401k too, because same situation. LLCs, I can walk into a title company all day without any problem. So it's a pretty smooth, simple process to set this up. So what does that leave me with? Like I said several times, I'm in control of my money, my retirement money. Okay? What I hear from a lot of investment situations where people have lost money is from a broker, well, let's try and buy this stock. Okay, sounds good when I'm at the desk. 6 months, a year later, well, Ken, we didn't do too well on that stock. We lost $10,000. Okay. But I've got another idea. Let's try this stock. My only problem is the broker's getting paid for all the tries. But I'm losing the money when we make a mistake. Yeah, I win if we are successful, but even on successes, he's getting paid for that. So basically, this is the one reason why I see most people want to self-direct their 401k plans or their retirement money, is basically they've already lost too much money in the regular situation, regular investing. If I'm going to lose it, let me lose it, not somebody else's advice lose it. Okay? Like I said, there's no permission. I don't need anybody's advice other than mine to invest the money. And when I said mine, the CPA is mine. Okay? I need that call. You just write a check. So basically, you can go to lunch. I've got this property. And like I told somebody yesterday, the thing you want that is absolute music to your ears is, please buy my property. I don't want this rental anymore. I'm tired of it. Or I'm moving, we got a job in Wisconsin, I have to move in 30 days to go to accept that job. I need to sell my house right away, and I maybe don't have a lot of equity. But I need it gone now. That is absolute music to your ears, because now I know I can set the terms of the deal. So I can make money on that house. And that happens a lot. So basically, what I tell, like, again, going back to realtors, I want the deal that you didn't have enough commission in, or somebody says, I want to just do I want to rent this house. Well, rent is the same as a lease with an option. You're only a question and an answer away. So basically, those are the two situations I'd like to know about. What you're turning down and throwing away, that is prime meat for me. And you could basically saving a lot of thousands of dollars in fees. You know, I don't pay. I mean, when you buy something with your money, you're not paying anybody any fee for that. You know, the only fee you're going to pay is at a bank for the checking account. If you're an IRA holder, you're going to get one of these generally from the IRS or from the custodian. They prepare that once a year as just information for the IRS, mainly when you make a contribution to that IRA. But the custodians are also required once a year to inform the IRS of what your balance in your IRA account is. And they'll generally give you a call. We want a balance. Some of the custodians will kind of insist, if you own property in an LLC, we want an appraisal. Well, it's like, it costs money for appraisal. Yeah, it's nonsensical because it's just an information return. Marketing strategy, okay? Rental houses inside your plan. I've got a number of clients that have built that up. They're making money. They're retiring, living off the rents, and they don't have to even sell the houses because the rents are sufficient cash flow for them. Another one is bringing groups together. again, if you look at money being a commodity out on the street, when I buy something, it doesn't have to be my money in that deal. I'm controlling that deal. So if you're in control of that deal, you set the terms. We're 50-50 partners, your money and my intellectual capital. Now you'll get some pushback from that, but what I tell people is just tell the people, just stand aside. There's 9 more right behind you, because a lot of people want to make money, and I don't want to do anything. I just want my money and give me a return. And when you're into real estate, you've got a solid asset. Like I tell people, you can drive by on a Sunday, go up and kick the house and know it's still there. Bring family members together. That's done quite a bit. You can organize real estate syndicates. Just organize situations. Your limiting factor is your mind and creativity. Fix and flip scenario. The situation here is you have an opportunity to do several of these during a year if you've got the program down. Like I said, it really behooves you, if you get into the fix and flips, time is an element that should be minimized when you're into a fix and flip. Like I said, when we were doing them back in the 90s, we would take a week in a house. And I know one of my former clients, they had 50 properties going at a time, and they made so much money. Prior to getting into the fix and flip area, he was in the mortgage business, and I thought one other business, I can't remember. He had to file bankruptcy because the economy turned down. Ultimately got into the fix and flip area, went on to do like 50 properties a month, had a total turnkey organization doing this stuff. As he saw the market come up and there was less fix and flip properties available, is getting tougher to find them, went to his partner and says, we got this many properties in process. Let's call it a day, and we'll take and split these properties up. You take one, I'll take one, etc. And so they ended up taking various properties. I don't know if they sold them or kept them for rental. Going from bankruptcy to doing that process, he's now retired. Well off, no problems. But he had what I thought was a good thriving mortgage business before and everything, went through bankruptcy. And I've seen multiple people go through the same situation. One of my clients, older gentleman, was making like $50,000 a month in rental income off of a commercial building. Got greedy and stupid at the same time. I say you can do one or the other, but not simultaneously, okay? And they bought 2 large apartment complexes, good buys, and his partner ran them really well. They made the mortgage payments, everything was up to snuff. What happened is the financial institution that they had the mortgage through was sold or went bankrupt or whatever, went through the FDIC process. Well, their mortgage had a termination date, and so it had to be refinanced, rolled over. Well, this new New York bank that bought them kind of messed around for a better part of a year. Yeah, we're going to refinance it. We'll just, we're trying to get organized, et cetera, et cetera. Okay? In the end, and remember, the mortgage payments were made right up to date. No problem. And then the complexes were rented up. Very good operation. The bank came back and said, we decided not to roll over the mortgage. And they could not find any other party that would pick up that mortgage. So what happened is when you see the dominoes start falling, that's what happened. The first complex went, then the second complex, and because he had this more or less fully paid for commercial building in town here, making him 50 grand a month in cash flow, and he pledged that on that loan, that would have vanished. Now, this guy who was set, houses in Paradise Valley, Pine Top up north, no worries on money or anything, is now working at the age of about 76 for about $39,000 a year. So basically, for me, when I do any deal, I try to ask as many people, what do you think, as possible. What should I do? How should I minimize? And I can stand here and tell you, I'm not without my losses. And I graduated in finance, and I didn't learn any of this stuff in the finance or the MBA. There isn't any classes on this stuff. So you learn it from the guys on the street who never set foot on a college campus, but they've done all this. And that's the pathetic part. And the more pathetic part is that a lot of people have lost a lot of money not knowing this information. But so it's fix and flips. It's marketing opportunities, multiple property sales. Generally, under IRS, there's no real kind of rule, but the IRS gets a little nervous if you do 5 or more of these and you don't call it a business. So that's the general rule, is if I do 5 fix and flips in a year, that's my limit. If I do the 6th, I better have as a C corp or as a business entity where I'm paying Social Security tax on that money. Okay, because I'm in business. I'm not in investing anymore. It may be subject to the unrelated business income tax if it's treated, in a different way. And definition of fix and flip is basically it's an ambiguous definition. It's based on my intentions. What are my intentions when I buy that place? So it's basically, did I buy that to keep it and rent it? Or did I buy it to fix it and flip it? That's real ambiguous. I can change my mind based on circumstances. I used to do a fair amount of 1031 exchanges, but everything I'm telling you today negates the use of 1031s. The only time I use 1031s, if somebody has bought something and they want to sell it, but they don't want to pay tax on it, and it's in their personal hands. Okay? 1031 is the only way to really push that tax ball down the road. Now, there is a way of getting out of ever paying tax on these 1031 exchanges. None of my clients have opted into that methodology yet. The methodology is you have to die. Because basically, when you die, you get a stepped up basis in property. So if we're looking at a $500,000 gain there, and I die, now I get a stepped up basis. Now I have $1 million up there that I'm passing through to my heirs. They get it tax free. So that is a way of getting out of paying taxes on 1031s. You may this whole area is, you can either use Roth IRAs or 401ks, and you can avoid all the 1031 rules. There's a rule when I sell something, I have 45 days to indicate what property I'm going to buy, what like property I'm going to buy. And then you have another 180 days to close on that property. And during that period, I'm not touching any of that money. The individual's not touching any of that money. That's over at the title company, a 1031 exchange title company. And if you don't do that stuff, then that sale becomes taxable to you. When you're dealing in the 401k area, you don't have any requirements to use an intermediary. It's just whatever I want. Again, it's going that sales proceed going back to your 401k checkbook, and you're doing another deal. And there's no requirements under the 401k area to buy the same type of asset that there is under the 1031 rules. I can do anything. I can go from property to racehorses to airplanes, whatever I want. The same people that I can't deal with, I can't buy, sell, or whatever, I can probably partner with them. Because in a partnership, it's your money, my money. Whether that be your IRA or your 401k money and my IRA or 401k money, but we're partners. We're keeping the money straight. You can deal with your spouse, parents, business partners, anyone, really. So it's quite flexible from that standpoint. Here's some illustrations of how you can structure it. You can get real elaborate with this. Basically, this is a partnership with various investors, 4 investors plus you. Now, the way I deal is if it's me over here and I'm bringing in the money from these 4 guys, I'm getting my percentage free. Because basically that's the way it goes. Now, like I said, if these 4 guys have a problem, let them go. There's 4 other guys out there. But if you have a reputation to do these kind of deals and make money, you will in fact have a waiting list. You will get people that will say, Vivian, now you remember me on the next deal. We made money on the last one, but you keep me on the list. Don't forget me. You will have more money available from these areas to do deals, then you can find deals. This is the hard part, finding the deals. As a matter of fact, basically on this situation, that's the minimum I'll accept on a deal. I was offered this on one or 5% on one deal out of Apache Junction, multi-million-dollar deal. Not interested, because what you end up doing is basically what they want is your intellectual capital on how to do it and your operational operational expertise. Because the other guy was a contractor, and the other guy is a partner of mine in other real estate venture. One of the best guys at locating deals I know, but I wouldn't let him really touch any money, because it's like a rat's nest, to deal with. So basically, you need these type of people. One is a contractor, very good doing that job. One is a realtor, very good at finding this stuff, finding these projects. You need those connections. But when I do a deal, I don't care if I own 5% or 95%, I'm in charge. My word's final. Because it's the only way to really save yourself, because I've done it the other way and lost. This year, we had a medical business that we started from scratch for diagnosing swallowing disorders. We spent a year. I had two professionals in the medical area proposing this, and it was good. And I had another partner who was good in marketing and people, and there was me. And they had proceeded to put this deal together. We had 4 or 5 people down in Tucson working on the company, selling, whatever. We had sales contracts from major health companies, just waiting for us to implement. But there was one fiasco after another. The whole thing went down the drain. Now, we had sales, and to this day, some of the people down in Tucson still get the request, are you guys getting back in the business? We're ready for you. So sales is not a problem. It was just the egos and know-it-all attitudes that did the company in. We lost there, and my partner and myself, we filed the rule, no money in the deal. So we didn't lose any money, lost time. Time you can't replace. But the other 2 gentlemen lost hundreds of thousands of dollars, just hundreds. And one was a former CEO of a medical company. And, it's like the arrogance and know-it-all attitude does you in. But there's no limit on what you can do. And, might I say, once I started doing this stuff, it's like, I've never been into drugs, but this is the closest that drugs came to me. It's basically, this is addicting. It's like, okay, I did this deal, can I do the next one? Can I do a bigger one? And this is a lot of fun. And I'll tell you what what we did up in Show Low. A few years ago, we had an opportunity to buy a property, about 150 acres. It had 2 lakes, an RV park on the property. It's about 6 miles outside of Show Low. So we bought it. It was $1 million with 0 down. So we controlled it. We subsequently took 7 acres out of that property, which was the RV park, and put it in another company. Again, virtually a totally leveraged transaction, so again, we had virtually 0. Through a couple of mistakes, tough cash flow and whatever, I have about $5,000 into this property now. Shortly after we had it, that 7 acres out of that 150 purchased, we had a rough appraisal done, and it was worth $755,000. So we still had the other 143 with a guy, multimillionaire, owns large businesses in town. But like so many guys who are very rich, I want that next check. But our cash flow on the RV park was not not there. So I was going down the expressway one day, and he called me, and we were talking, and where's my check and all of this. And I says, you know, cash flow's tight, you know, and so, well, and he made one statement to me. He says, well, hell, I might as well donate that property to a charity. And what I said to myself is, if you want to donate it to a charity, I will form the charity to donate it to. So I proceeded, because, you know, we're into my area now, taxes. I set up a 501c3, qualified it with the IRS, so you can make a donation and get a write-off on your tax return. It is a wildlife preserve. There are no buildings on it. We're running a few cattle on it. But for the most part, it's wild animals and stuff. It does have a big gravel pit on it. So for any gravel that we need for the RV park, we get totally free. It's right on a main road. We got about a mile of road frontage between Snowflake and Show Low. So it's right on a highway. So it's like, and like I said, it's got 2 lakes. Next time I do some slides, I'll put a picture in there to explain. Beautiful place. So we have that nonprofit there. Now, again, we've got that 7 acres over there. But where you want to start being creative is that RV park doesn't make sense when I can take and cut up that property and make special housing units where someplace that you can come, build your own house on 1/3 of an acre across from a wildlife park that nobody's ever going to build on. Okay? So, and it's totally like in a fishbowl. You will not see the road. There's no traffic going by or anything like that. It's just off, you know, you drop down into the bowl and see it. But that's what it's a possibility. But the icing on the cake is, because we control the nonprofit, we have the ability to buy property out of the nonprofit. So there is additional property that we can buy out of the nonprofit that will provide about 50 some housing spots, and still leaving the nonprofit intact, which equates to about a $4 million profit. Okay? So I stress the creativity, the thinking, the talking to other people is so important that I can't stress it enough. But these are things that you can do up there. And these are the guys that you kind of need on your team. I would say you need, this is, and I don't want to just slap myself on the back, but I don't know anybody else who does the stuff I do. Nor can I talk with my regular other CPAs. I can talk to you guys about this better than I can talk to another CPA. And I'm actually doing some of this stuff with a large CPA firm down in Atlanta, 50, 60 man firm, setting up these for their clients.
Well, see, I understand this because I'm not the guy with the MBA.
But again, going back, that's not what I'm working on. This is basically tax stuff and linked with investing and creativity. And that's what you find on the street. And one of the areas I got started in this is back in the early 90s, I was working with a guy who was one of these street guys, but he owned real estate all over the country. You know, he was just a blue collars guy. And so he said, we got talking, and the one reason I stuck with him for a long time, I didn't make any money with him, but he says, Ken, people will give you houses. I'm a finance major. Nobody said that in any of my classes. I said, I disputed it. No, the people won't give you houses. And I was, we would just for fun and games, we would look at want ads and look for deals. So we found this one house on the west side, 35th Avenue, and I was pretty much on my own myself. Went over there at the kitchen table. Yeah, we want to get rid of our house. And whatever. Okay, I will give you $1 for it. Okay.
Just want it out.
Just want it out. I was so flabbergasted, I forgot to give him the $1. But yeah, just for the heck of it, and it's basically, like I said, when you get into this, you get into the game. I did it for $1. Can I do it for less? That's my next question. The next situation we ran into was a guy who he sold his house, he was on the mortgage. So he was on the mortgage and he sold it to another guy with like an assumption or whatever, and the guy wasn't making mortgage payments. So the original seller had a small note. I think it was $5,000. But because the mortgage payments weren't being made, the mortgage company was coming after the guy. Where's my mortgage payment? We're going to foreclose. And so this was an older guy living in a one-room apartment, kind of. So it wasn't extravagant at all, or didn't have money and stuff. Was almost having a heart attack. Wanted out of that situation. So we said, okay, we will buy your $5,000 mortgage, your carryback, and make up the back mortgage payments. And what we will pay you for that $5,000 is a cup of coffee. And it was done. Deal. So we called the guy who was living in the house, and what are you going to do with the house? Well, we're going to sell it. It's like, yeah, sure you're going to sell it. Okay? So we would call periodically and where we at in the sale? Such, such. Who's the mortgage, who's the broker or whatever, and on and on. So it went on like that for a few months. And then I was sitting at the desk one day and the phone rang. So I says, hi, you know, what's this? And this is XYZ Title Company. Do you own the note at such and such and such? Yeah. We're going through a transaction. What's the payoff? We figured in late fees, everything in the kitchen sink, about the kitchen, and everything, including the kitchen sink, was in there. It came into about $7,500. $7,500 for a cup of coffee. Now we felt guilty, so we took him and his girlfriend out for a dinner. That was the payment. But to this, I will tell you even better examples when we get into the business area. But when you start, and it's for me, I don't know, maybe for some of the other people too, but it becomes such a fun game. And it's always me against me. Can I do better tomorrow than I did yesterday or today? And it's like, okay, it cost me a cup of coffee on that. Can I do it for a glass of water?
That's the right way to think, though.
It's basically what can I do? You know? And when you really analyze it, I'm fixing problems. Problems for people, because they don't know any other alternative. They don't have any other alternative to get out of it. So basically, what you're doing is a problem-fixing business. Even though you're achieving a good objective for you, it's like you're getting an example. And I have a new assistant, and I had a discussion with her yesterday, and I said, what are you guys doing? You and your husband, you going to buy a house? Yeah, we're going to save up money and eventually buy a house. And so I went over I said, you don't need money. Here's how you do it. Now, if I can help her and her husband buy a house without having to wait this time period, accumulate this amount of money, do without stuff in life, I think you help somebody. You know? And basically, when you start doing this, you're not trying to take advantage of anybody. It's like, you got the situation, I don't, and here's the solution for it. So when you provide the solutions, that's the help that you're giving other people. So these are the team that you need. It's quite hard to find investment realtors. You got to go through a lot of guys and women before they really start. They understand what wholesale or below is. I'm looking for deals. I'm not looking for retail pricing. Financing, I've got a couple organizations that you can use financing. One local bank, one out of the Midwest, that'll do all 50 states. And title companies, since you're using like your LLC, you should not have any problems with title companies. There's no problem there. As long as I use LLCs, there's no problems. Okay? Well, here's a success story on a client. This actually happened several years ago. The guy, basically, his job was drilling oil wells for other people. He was down in Argentina when this occurred. He invested 20 grand in a property, had it in under contract. That's all he had. just a contract on some land in southwestern Arizona. Put 20 grand in it. This happened within 3 months. He, like I said, he was down in Argentina when this happened, received a phone call from a realtor. You interested in selling your property? Yeah, at the right price, I'll sell it. Okay. What happened is the property value profit came in at about $1.5 million. Now, remember, he had this money in his Roth IRA. Okay? He was already pretty much, I don't know, in his late 50s or whatever. So he was pretty much on his way to retirement. But the profit was $1.5 million, all in 3 months, from 20 grand. Now, normally, you want to say that's once in a lifetime situation. That's never going to occur again. Well, with this guy, lightning struck in the same place again. And so he had another situation where he had another opportunity. And the profit on that opportunity was going to be $1.8 million. Again, in his Roth. So what happened is basically you got greedy and stupid at the same time. It's not enough. The stack of money is only this high. I think it's going to go up here. So I'll pass. Well, it went all the way down here. So he made $1.5 million, but he lost $1.8 million. Okay? So the moral is, again, you can get greedy, you can get stupid, but you can't do it both at the same time. And what I tell people is basically, when you have a pile of money on the table, and I've seen it many, many times, take the pile off. If you're that good at doing that first time, you surely should be able to duplicate it. So take it off, do the second deal. Okay? But and he's still around doing some of that stuff. He's a difficult client for me to handle. It's just basically attitude-wise. Here's basically the fee for I charge. It's $2,000 to set up the plan. If you have more than $250,000, the Department of Labor says, I want to see what you're doing with your retirement money. So there is a Form 5500 EZ required. The annual fee for that EZ plan is $270. And including in that is plan consulting for 6 months. But in essence, you get $1,500 of it back. There's a tax credit for setting up a plan. So you can get that money, that $1,500. It takes you 3 years to get that $1,500 because they'll only give it to you $500 a year, per year. But so it basically only costs you $500 to set it up. That's my information. Generally, I get calls from everywhere. Do this across the country. So if you have any questions, need any help, let me know. Mainly, I don't even go out on the street and sell, like I want to do your tax return or I want to do a financial statement. Those are already given to me because basically the IRS wants a tax return and you want to stay out of jail, so you're going to have somebody do it for you. Or need a financial statement because the banker says, I'll give you this money if you show me how much you're making and give me a financial statement. So neither one of those products you want, but you need. So you're going to come to me on those. Here's what you want. I want a business, a building of a big business. I want to pay little or no taxes, and I want my wealth to grow. That's what I sell because that's what people want, not the other stuff.